Good morning. I'm Peter Milios from the Finance News Network. The Dow Jones Industrial Average finally ran out of steam on Thursday as investors cashed in following a historic streak of 13 straight gains. The 30 stock index fell 0.67%, dragged lower by shares of Honeywell, which recorded lighter than expected revenue than Wall Street wanted in their latest quarterly results. A pop in the 10-year Treasury yield back above 4% didn't help the sentiment either. If it had gained a 14th day on Thursday, the index would have tied its record-winning streak going way back to 1897. The Dow's winning streak was driven by signs that the economy will dodge a recession, falling inflation data, and resilient corporate earnings. Wall Street got more evidence on all those fronts on Thursday. The Dow kept going higher this week, even as the Federal Reserve hiked rates to the highest in 22 years on Wednesday. Investors took the rate hike in stride as the Fed Chair Jerome Powell said after the decision that the central bank could raise rates again or hold them steady at these levels depending on the data. The central bank meets again in September, and traders are betting that the upcoming data will cause the Fed to back off. The S&P 500 was lower by 0.64%. At one point during the day, the broader index topped the key 4,600 level for the first time since March 2022. Meanwhile, the Nasdaq Composite slid 0.55% as investors took some profits in key tech shares like Microsoft and Apple. Meta Platforms shares popped 4.4% on better than expected results and strong guidance. The company's numbers were boosted by a rebound in ad revenue, and the latest gross domestic product reading Thursday showed a rise of 2.4% in the second quarter, which was better than the 2% increase expected by economists polled by Dow Jones. Teck Resources is actively evaluating offers for its steel-making coal operations and engaging with multiple parties while also defending against a takeover bid from Glencore. Walmart is partnering with a California-based startup, Ruby Laboratories, to test technology that captures carbon dioxide from its supply chain and aims to convert it into yarn for clothing using biochemical processes inspired by how trees grow. The GDP report also suggested price pressures are easing, with the Personal Consumption Expenditures Price Index rising 2.6% in the second quarter. That's lower than the 3.2% increase expected by economists and the 4.1% rise in the prior quarter. Turning to commodities now, some of the world's largest mining companies are increasingly pessimistic about sustained commodity prices gains this year due to an insipid recovery in China leading to a drop in first half earnings, with Anglo-American CEOs stating that the economic pressures and slowing opening in China suggest a more likely commodity price rally in early next year rather than later this year. Overall, all US sectors except for communications services closed lower overnight. Real estate was the worst performer. The SPY futures are pointing to a 0.6% fall. Thank you for listening. Have a great weekend.